I'll be going over price action on NASDAQ on December 17th. So basically, to start off with, we see this huge imbalance here in the market right here. So I'll mark up this equilibrium right here. I'm expecting for price to retrace back into this and for us to get a reaction off of it. And so the reason I say that is because if we scale down, we can already see pre-market we're starting to get this move down here. Yeah. Pre-market, we see this move starting to form off like this whole thing really. And so we see market open. Or is this market open? This guy's 12 a.m. What the hell? Let me mark up. So this is our market open right here, 9:30. But yeah, we see this whole move down. And so market open, we see price keeps going down. And so yeah, we see this move down right here, and then we see a retracement, whatever. Or so not a retracement, we see some selling pressure out of it, and then but this wouldn't have been a favorable area to enter off of because I'm trying to wait for price to reach equilibrium. And so I didn't enter a trade today. But if I did, I probably would have gone stopped out just simply based off of what I was thinking, right? So as I was going back over the price action for the day, we were actually hanging around this area right here. So I would have entered somewhere around here, and then later that day we were hanging around here. So I was like, all right, so we're hanging around here. This is what my favorable trade. This is where I would have entered. Technically, we would still be in our position. So I entered a trade about right here, and I mark up my highs and my lows, and unfortunately, I get stopped out. So I would say that this would have been a failing trade, but I'll still go over why that would have been a failing trade. And so essentially what I was looking at was this whole move up, this move down. We see some sort of buying pressure out of this, a pretty big candle to the upside. So then we wait for a retracement. This is more of a 15-minute retracement, but we still haven't closed below this low. So this still has not been invalidated right here. So we're still looking for a break of structure on the 1 minute, and we get a break of structure at around 12:25. So in this whole area, we're looking for break of structure on the 1 minute to the upside. So on the 1 minute, if we go right here, $12.25 we said. So yeah, $12.25, and we get a break of structure to the upside right here. Off of this high right here, we get a break of structure to the upside. So we enter right here, and my mistake was honestly I just simply disregarded any confluences at all. And yeah, we would have taken profit here if we were smart, but we were stupid, and we put our highs all the way up here. We put them all the way up here off of a 15-minute draw on liquidity. And you guys are probably asking, why is that not correct? Well, simply because if I were to have marked up my confluences, such as fair value gaps and things of that sort, we would have seen not only do we have these two fair value gaps, these two bearish fair value gaps here, but we also see this BPR. So this is our BPR. So we have a fair value gap here, and then we have a fair value gap right here, and the area in between is our BPR. And so this right here, if we're on an uptrend, right, and we still haven't, retraced back into this, if we're in the retracement back into a fair value gap or a BPR, right, that's probably a good area to put our take profits, right? So our take profits would have been, if we were smart about it, it would have probably been in the middle, or at least like right here as price is beginning to enter this BPR, or the middle of this fair value gap. So that would have been a reasonable take profit. The only thing is, risk to reward would have been horrible. And so, however, it wouldn't have been too bad of a trade simply because the confluences, the equilibrium, and then break of structure, all those sorts of things all those sorts of things would have added up. And so we would have gone stopped out because we put our take profits all the way up here and we completely disregarded this strong area of retracement. And so, I mean, at least I didn't enter, and that's a good thing, right? Because we learn from every lesson, or we learn from every loss. So yeah, boys, that's honestly basically it. It's like I've got no more for you guys on this trading day. Simply just, you know, it serves as a lesson learned to not ignore your confluences and go based simply off of, you know, draws on liquidity, right? You also want to, you know, mark up your fair value gaps, order blocks, all those sorts of things. So yeah, boys, that's my trading recap, or my market bias for the day. I'll see you guys in the next one.